Does an unexpected income event have you owing a little bit more to Uncle Sam than normal? If so, stay tuned to learn more about how to optimize charitable giving and maybe save a little bit in income taxes along the way. Welcome back. 2021 was an exceptional year from an investment perspective. We saw equity valuations soar, and while we love seeing account balances increase, many times that might also associate an increase in income tax liabilities. So with that in mind, today we have Kelly Reagan, wealth advisor at Gerard, to discuss a little bit about optimizing charitable contribution and maybe a little income tax relief. Kelly, thanks for joining us today.
Thanks for having me.
So Kelly, when we have years like 21, we have happy clients on one hand to see their account balances going up and up and up. We also sometimes get a call and say, oh man, did you really have to send me that big tax bill, Brian? So with that in mind, how can we help our clients maybe keep a little more of what they earned and feel a little bit better come April while also doing good in their communities?
Right, there's a couple quick tips that we can share today that could help you with that. The first would be if you have a required distribution from an IRA account, which it has to be a certain type of IRA, and typically clients 72 and older, it might apply to them. So if you had to take that required distribution directly out of your IRA and it went into your bank account or your pocket, that would be exposed to ordinary income tax at your rate. A way to get around that and benefit you if you already have a charitable intent is if you donate directly from that IRA to the charity, as long as it's a 501c3 status. The charity would receive that money tax-free. You would fulfill your required distribution without having that additional tax.
Two birds with one stone, right?
Right.
Accomplish your requirement, save on income taxes. Excellent. Is there any limitation on that? Is there a minimum or a maximum that one might be able to give when it came to an RMD going straight to charity?
No, you could give anything from $1 to the full RMD. It doesn't necessarily matter. And the frequency doesn't, as long as you accomplish it during the year, that's okay as well too. But I would say typically I have a lot of clients that, if they have a religious intent, maybe they donate to their church on a weekly basis or monthly basis. It's a great idea for them. We know that they're going to give and continue to give to their church, and they have this required distribution. We can save them a little bit of money by donating it directly from the IRA to their church.
Excellent. I guess shifting gears a little bit, when we see stock valuations rise and account balances go up, many times we also see unrealized capital gains increase in our client portfolios. To our clients who have significant embedded gains on the stock side, what might they do to, again, help charity and maybe benefit themselves a little bit too?
Right, exactly. If a client has a low cost basis stock they've either acquired throughout the years or it's just done, super well, as you said, we might say to you, we would like you to rebalance that stock and maybe trim a little bit because it's becoming a concentrated position. Well, if you sell that stock, then you will owe capital gains tax on the profits of that stock sale. Conversely, though, if you have a charitable intent, you can donate shares of that stock to, again, a 501c3 charity. They can receive the stock and sell it tax-free. So it's a nice way to reduce that position size in your portfolio and also still donate.
Kelly, when we talk about position sizing, I think that's a good point to touch on. What do we define as a concentrated position?
Typically somewhere when it starts to creep up around 5% of your portfolio, our red flag starts to go up to say maybe it's something that we should start to tackle here.
And let's say that we have a client in that situation. Maybe they worked at a company for 30 years and just kept investing in the company stock program. Maybe they made some great investment choices and have held them for 10 years, like we said, and just really appreciated. How can that client confirm whether their desired charity can receive stock, whether their desired charity is a 501c3, whether they're eligible to make a gift of stock, etc.?
Right. I would say the best option to start is to go to the charity's website, and there's typically a donor relation area where there'll be a contact info or phone number for you to call, and that's great questions to ask. Another one would be you want to make sure that the charity can accept shares of stock, typically through a brokerage account. So we can help you with that, but also just start with the donor relations through the website and go from there.
So our clients can be self-sufficient, and also, right, that's where we tie in Univest Foundation to help our clients with donor advised funds on 501c3 status research, on logistics of the grant-making process, etc. With that said, Kelly, thanks so much for joining us today.
Thanks for having me.
And to the viewer, thanks for staying engaged. If this topic's interesting, if you'd like to try to find a way to optimize your charitable giving and explore what options are available on the tax side of things, please feel free to reach out. You can visit our website, meetgerard.com, and while there, find contact information for Kelly, myself, and the rest of our team. We'd love to connect with you and your tax advisor to review your available options.